Well, team, if you guys remember this morning, I started the show with the blue light and it quickly went to the red light. I think we were a little bit right there. Now, the only thing is, what is the focus here, right? Why are we going down? Is it recession concerns, inflation? What's the next move from here going forward? Did we already get our Santa Claus rally? I'm going to say this is more like the fourth quarter rally. Did it already end? Let's ask Joel Elconin and hear what he has to think. Let's get into it at the close. Hit the like. Let's get it started. And I got a little special surprise. Joel's bringing someone extra to try to bring us at least some outlook. See where should we be looking maybe tomorrow.
All right, it is time for pre-market prep at the close.
3 consecutive highs, opened, matched yesterday's low, and then once it took out there, that's all the breakout momentum traders needed.
What's going on, Joel? What's happening?
Mitch, bad news is bad news now, Mitch. It's not.
Oh, that's what it is.
Yeah. You got to learn the philosophy of Wall Street, right? Sometimes bad news is good news, but now bad news is bad news. Okay, so I don't know if they had that on your CMT exam or not, but you just got to know. You just got to know that, like, how things change. Not worried about inflation anymore. Now we're worried about a recession from the numbers. But anyways,
just to add to that, one thing that was in my CMT book is a lot of talking about EMH, right? Efficient market theory, right? And so we all know how Dennis feels about this and his inefficient market theory outlook. But it's kind of like these moments where you really realize what is going on with that theory, right? Was today potentially maybe an underreaction to the number? Because it seemed like that's what happened when we got the number. It seemed like it was almost like no movement really happened. And then when the bell came, that's when we really saw the whoosh down. And I think that was the effect from the numbers. Remember when the numbers first came out? I said, there's a lot of numbers here. It might take a little bit to decipher through, right?
Yeah.
Decipher through the way that the investors are thinking about this. It seems to me like that happened. And really close to the bell is when the investors started realizing negative retail sales. That's actually a negative thing. Why? Potentially, maybe that shows us that earnings are coming down, right? That they're not being able to make as much this retail season. And even though we were able to hit dollar amounts on the Black Friday and the Cyber Week days, was that just inflation that helped us get above those nominal rates, right? Those nominal kind of outlook, right? Well, that could have very much been it. And now we're starting to see the effects of earnings decline. Focus, I think, is starting to slowly go away from just inflation, because we are seeing inflation coming down. Focus is on recession. That's where it's at.
Is. We're worried about it. All right, let's recap. The pre-market traders had it right. Never really gave us a chance. Didn't even give us a chance to sell yesterday's low. Now, is that rude or what? 97.25 was the low, the true low from yesterday. Pre-market high 85.25. Now, I talked about the bottom of the 26-day trading range. That was 45.75. When we cut through that, I was looking for 3,900. I had nothing in there until an intraday low at 39.01.25. So it found a bid at 39.08. We're 30 handles off that. That's some good news. I think Rob Freeze is going to come on in a little bit and give us a little bit more good news as far as seasonality goes. The first couple weeks of the month of December are weak. Also, we have Quad Witch tomorrow to keep an eye on. So let me run down. The buck is back. It's up 76 cents at 104.51. TLT, right up near the high of the moon. So this thing is just rebounding really for no apparent reason. Maybe flight to safety. Crude, we talked about not only the double top but the triple top at 77.80. That's down $1.16 at 76.12. Gold just couldn't hold that 1,800 for more than 2 days. Down 29.90 at 17.88.80. Silver really taking it on the chin. That's down 80 cents at 23.33. And Bitcoin, That's down 355 at 17,440. Let's start out with Netflix, Mitch. You give us the news again for this morning for people that slept in and didn't listen to the morning show.
Yeah, so Netflix was all on the matter of this morning. We got a report from DigiDay report, and this report was stating that the firm is offering to return money to advertisers after, of course, missing viewership targets. Of course, Netflix has recently released their ad tier, and what they're pretty much were saying is that if they weren't hitting their traffic numbers, they could pull back their remaining, let's say, advertising content that they were going to put out. They could pull that off. And this is just, I think, more of a concern about the ad tier platform and the success that it's really truly going to have for
Yeah.
Netflix. I think this is personally a little bit of an overreaction to the news. I don't know really. I haven't had an answer. We haven't gotten an answer from Netflix. So I'm going to wait to hear what happens there. But is this really a bad thing in the long run? I think what they're trying to do is not make it so stringent on their advertisers that are trying to join their ad tier so that they see that they can hit their traffic numbers and give them the kind of the exposure that they're looking for, probably getting away from the other major company, right? Like Meta, just bringing that up there.
Yeah, no, it's a good. I mean, returning money. I mean, that you brought in on the books, that could never be a good thing. When we were looking this in the pre-market, it had breached these lows at the 302 area and really hadn't recovered as we spoke. Now, when I was looking for that to get back over that area, it flirted with it a little bit off the open, got to 303.39, nowhere near that low from yesterday. And then I talked about the dangers of this bar right here, right? Where are you going to find support in a support where there's no bar? Now, our expectations really wasn't for it to get to 280.41. It got to 286.55. So the only way you would have caught that low, if or anything near that, would have been just scaling out, some at 89, some at 87. You wouldn't have got done at 86. Really, the only way you could catch it, attempting to rebound it off the close. But if the market's, of course, we got the quad witch tomorrow. If the market's going to shrug this off, then it's going to make a couple lows in this area. Let's say between 285 and 290, and build a little base and go back up. But not only did it have the bad news, but it had the market forces working against it as well. So that's a look at Netflix today, and Triple D a little early on the exit after that Wells Fargo upgrade, but his 307 sales looking better and better.
All right. Before we bring on our guests, want to get through one last one that I don't think we were able to cover this morning, but just want to at least make sure that we covered it on the news. I saw the chat talking about it. So let's just do really quickly. Novavax announcing a proposed $125 million public offering of common stock. That was this morning that was released. Novavax reaffirmed fiscal year 22 total revenue guidance of $2 billion versus $2.01 billion estimate. But as you guys can see, NVAX taking a hard hit today, down to 1150, and that chart makes me want to go. That's something
I don't
you want to
know.
see.
What a time! What a time to do an offering when you're hanging out at the lows of the move. I guess the company had no other choice. I guess we don't have an offering price in it now, but
Yeah, no
yeah,
terms.
I wouldn't be surprised if I mean the street thinks it's going to get done at 11 or 12 bucks. So I don't know. I mean, they might have to be careful of this one. If you short this one, I have no idea what they're going to do, but after looking at what their stock did, I think they might want to reevaluate whether or not they do the offering or not, because they're going to have to offer at a low price here at NVAX. There's not much you can do it. The much lower open 14.16 turned out to be the high of the day. And this stock, I remember writing about this one during the pandemic, and I'm like, I don't like stocks that do these, it actually in its past, it's done things like this before. And when a stock has a prior history of doing something like that, I don't know if it reverse split or whatever. It makes me a little bit cautious on it. So it's not the best in breed by any imagination. It's the worst in breed. And yeah, you can see a spike it had in 2050. Well, no, you can't because I'm looking at my monthlies and you're not. But be
No
careful if
worries.
you're
I
still
can see
short the
that there.
Novavax. Yeah. Yeah, be
Good
careful
call
on the
out.
Novavax if you short it. Who knows? I don't know. I'd pull the offering, but I'm not heading
Good
Novavax, so that's
Good
it.
call out. There was a 1-for-20 split on
I hate
May
those.
10th, 2019. And that's what you're just calling out there, Joe. Good memory there. I like it. Good
For an old
job.
man, I'm not too bad.
Not too shabby there. All right, let's go ahead. We're gonna go and pull this down a little bit. We got someone snooping around in the back. I think I see him. The one, the only. Is that Rob Friesen? What's going on, Rob? How we doing?
Not too bad. It's kind of weird when you're backstage because it says like, you're only the host can see you, and he could bring you on at any minute, and you could have like food in your mouth or whatever.
Nothing like the power, Rob. That's what it's all about there. The power of the dark side. It seems like the dark side came in today. We definitely got a little bit of a hard hit. What is going out there in seasonality? Talk to us, Rob.
Well, can I share my screen here somehow or no?
Of course. Yeah, that I still give those powers away.
You do. Okay, let me do that then. Present. Share the screen
present.
and.
So when you go to that share the screen, on the top right tabs, the right one will be entire screen, and the first tab is like kind of just a window. You just want to share a window.
Oh, I see. Okay.
Boom. But
and Rob, before you
What's
go
up,
into
Bill?
that, Rob, before you go into your new stuff, just talk a little bit about what we've been talking about, the 10:30, 11 show, as far as the seasonality of the first couple of weeks of December.
Yeah, well, the mid-month seasonality was a little soft for December. And I probably, the 2018 timeframe was a fairly big influence on that because we had a pretty bad drawdown, right through the middle of December, if you remember back then. But anyway, if you can see, just acknowledge you can see this screen, okay? Is that all right? Okay, good.
Boom. Got it.
Okay. So, these charts aren't as pretty as your charts, but this is a weekly chart of the SPY. So, again, just a recommendation to traders to always push themselves back and look at things in context, daily, weekly, even monthly, if necessary. But this is just a little bit concerning in kind of where we sit here. And I was curious whether we would have a repeat of that 2018, this week and next week. Next week's the more critical week for that. So there's a lot of forces, and we're just now post FOMC, and we got expiration tomorrow. Normally on the shows, Joel, I've talked about how we have a transition sort of after expiration. It can be the opposite of what you experienced before it. But I would be likely to say it might be a continuation the way things are going. And then there's always the conflict with the Santa Claus rally and if that's going to come around or not kind of thing. So, but this weekly chart here, how we're going to finish possibly tomorrow, that'll be a big deciding factor. I always like to, do the weekly wrap, kind of like, where are we? How have things closed? What was all the drivers? What was the context? It just gives you a good reset for the next week because, the markets, when they're more volatile, have become that kind of weekly tweaking, weekly adjustments. It used to be you could kind of do that quarterly, but it's now it's sort of every week you look at what's happened, how you've arrived where you are. And so tomorrow we'll have to take a close look at how we finished. But Joel, what's your thoughts on the technicals on this SPY?
Oh, the old mute trick. Should I jump in and steal his thunder? I want to jump in. Go, Joe.
Oh,
What you got for us?
you can, hey, money,
26
Mitch, you can do it.
What you
I
got
got
for
you.
us,
Joel.
Joe?
26-day
Joel.
trading range, Rob. We had a 26-day trading range, and the bottom of that trading range was last week's low at 45.75. The spike highs, like that high that we had on Tuesday, that was ridiculous. A lot of time was spent between 4,000 and 4,100. Now that we breached last week's low here, we better recover it real quickly, because I see some air pockets down to 3,800. So
Well,
we were hovering to that trading range, and we broke the bottom of the trading range, and we're going to close below it.
Now, here's the thing. This is an interesting, and a lot of people that are new to trading don't get this part of the market factors in everything that it knows or can anticipate. So when we roll over the seasonality, I'm going to show you something, and it's like, is this going before that, or will that be additive to this? That's the tricky part, right? So let's roll over there. So this is, I mean, from a standard deviation perspective, from deep discount, from like flushing people out, from advance ahead of maybe what's expected. This could all be a great discount, could be a great setup, could be we slingshot back with a nice Santa Claus rally or whatever. So you have to run scenarios. Nobody knows for sure. I know Mitch is great, Joel's great, Dennis is great, but we all have probabilities only. We don't have guarantees. So we run scenarios. This could happen or this could happen. So let's roll to our seasonality. You can find our seasonality calendar by just subscribing. It doesn't cost you anything. It is a free calendar, and it's actually a very powerful strategy. Once you go in, you can see this. You have to select the month and the different signal that you want to look at. So this is December, 3rd Friday of the month. When I look at this, I see two stocks that are kind of big outliers. So there must have been some events, not only a shorter history, but also some events that have happened. So I won't necessarily focus on those. I'll focus on everything else. And you can take these symbols and you could look for corresponding information on the other dashboards like RSI, Bollinger Bands, if you're a subscriber. If you subscribe to the web screener, you can take and dump them in and run through all of the different screens for the next day. For example, you could say at the close of today or 2 hours after the close, when we're updated, you could then say, what do I expect for RSI? And you could put those symbols in just like I dumped in Netflix and Novavax here. So we'll cover that a little bit more right after we finish this seasonality thing here. So you go there and you get this and you choose Thursday, Friday. Now let's roll to the next page. This is the 3rd Friday of the month, which is the worst performing day from close of Thursday to the close of Friday. It's the worst performing day of the whole month based on the calendar events that we have here. Fridays in December are also not the best. I know we had a good one of them was okay, but they're not generally the best. So Fridays, 3rd Friday, and then if you take the monthly expectation for the SPY and the Qs, it's also slightly down. So things aren't, setting themselves up that well for a really bullish day tomorrow, according to the probabilities of seasonality. Now, how you kind of get an advantage here is when you go to the individual symbols, the ones that have really been, say, discounted already ahead of this seasonal event. And some of them, hey, there's your name in there, Mitch right there.
I know the Mitch stock.
I know, the match. Yeah, but so some of these stocks here, they could be curious setups, and who knows, we could have a very positive day tomorrow. Everybody's got flushed out, they're all fearing the worst, and we have a positive day. Well, then I would want to focus on these stocks that have historically performed well. And, you could pick some of those and then short the spider and some of the Qs or whatever against them. Or you could do some of these symbols over here that are expected to be down. So when you look at this universe, and you can play with these sliders, and that'll change the symbol count that it's pulling from. But it basically shows you that the sentiment, is negative, which is based on what's happened in the past. So not supposed to be a very bullish day is what we're getting. So the edge goes to however we open tomorrow. If we open down huge, we could have that as the low print of the day, and we could start retracing from that. So my edge would be on the stuff that I can buy that's favored for the day, and I'm buying it on the cheap. Now, if we open up tomorrow, that could be the high of the whole session. We've seen that movie before many times. If that's the high, I want to focus on these short stocks that I can sell into that opening gap and get that benefit that they're already expected to be soft for the day. So you see how you can change it up based on having your list, and then whatever the market is doing, fine. I don't really care if it's up, down, sideways, or opens flat. It makes no difference to me. But if it's up, the edge could go to the short side. No different than if you recall a couple days ago, we opened up and filled the gap, right? Within 2.5 hours, gap filled, big premium, edge went to the short side. What ended up happening on that particular day, I was showing this chart to a number of people, was on the other day here. So this is the ratio chart of consumer defensive to consumer discretionary. And on the 13th, the reason that this spread relationship opened at a discount is because XLY opened at a premium much greater than XLP. So that meant that people wanted to pay for the opportunity of discretionary growth, cyclical stuff, right? So they wanted it. They really wanted it. And we're like, sold. We're happy, sold, right? If you really, really want it, you want to pay that much on the open, we're sold. So that's where the spread opened at a discount. All you would have had to do is buy XLP and short XLY at the open, and that's what you would have got. Now, the other option is just sell the XLY and have the XLP standing by if you need it. So there's amazing things you can do with relationship-based trading. Amazing things that you can do with combinations of pairs, or even taking that into the basket approach, just putting a whole bunch of combinations together and treating them as a shotgun approach in basket trading. Now, let me show you something else here. This is, we do this
Love this stuff. List. I love it, Rob. Keep it going.
This is the top 10 list that we do for the S&P, and it's above our benchmark this month. So, when you trade baskets, you can optimize based on the conditions of what I just mentioned. We're opening at a premium or we're opening at a discount. But this is what I call a baseline approach. Okay, it's curated from the day before for the next trading session. Just no different than I was showing you with seasonality. There's a number of ducks lined up. So inside of this is RSI and %B and momentum and things like that are embedded in the algorithm that selects these symbols. So it selects 10 long and 10 short. In a perfect world, 10 wouldn't necessarily be the right number, because some days you might only have 6 good ones, or you might have 15 good ones. It's just, in order to produce something consistent and market it, you kind of have to do weird things like 10 and 10. Okay, so it's 10 long, 10 short. Even amount of capital, okay, is what's recommended for this list. And it's market orders at the open, market orders at the close, which is not necessarily the best. Included in one of these days could be something where you paid up 10% on a stock, or worse, you shorted something that had news on it. So it's not vetted. It's what's called a baseline approach. It's 10 great long ideas, 10 great short ideas. And this is the results so far for December of that methodology. I want subscribers to take it to the next level by vetting and seeing if their vetted results are equal to or better than the baseline approach. I want them to use the market gaps efficiently. So if we're gapping down significantly, it would be better to deploy the longs, maybe, have that SPY standing by as a hedge instead of deploying the shorts down into the hole. You don't want to sell stuff that's gapping down, 4% on average. And the reason is because the market's generally buy side. So it's sort of a little bit self-healing from that perspective, right? For the day. So you got to be careful how you execute. But this approach right here that I'm showing you is totally baseline, not vetted, not doing anything fancy. It's just open to close. And our goal for the algorithm is 1% a week. And this is higher than that because already for the month, cumulatively, we've done 4.77%. Now, this is based on 200,000 of capital applied per each day. And so that'd be 2 million totally used. So, if you don't have that much capital to use, then you use whatever you can. And of course, then you have to look at commissions aren't factored in and things like that. Now look at the SPY, open to close. Now there's something you guys need to know about the SPY in terms of open to close performance versus close to close. In great bull markets, all the returns come from the overnight returns, close to close in a SPY. In bear markets, it's still better than what happens generally open to close. And even in bull markets, open to close is not necessarily the best. In fact, traders can make a lot of their money just by shorting the open and trading it open to close that way. But you can see that for the month so far, open to close is down 3% and close to close is down 2%. So if we're up 4.77, that means we have 7.78% alpha over the market, right? So I just want you guys to think about something. All the talking heads, all the opinions, all the recommendations, all the upgrades, downgrades, all that kind of stuff, all the news that goes on, smartest and most brilliant people on the planet, and mostly they get it wrong. And here's just plain historic statistics that is selecting stocks without thinking, without news, without vetting anything, and just going, let's put them on at the open, take them off at the close. So I think you guys can take something like this and really do magic with it.
Yeah.
And certainly outperform the talking heads on the telly, wouldn't you say?
Well, one thing that I would say, Rob, is from a person that's studying how to create systems and things like that, one of the hardest things to determine is how to be discretionary, non-discretionary, or maybe partially discretionary. I think that's what the system unlocks for you. It's going to help you not be so just worrying about what patterns are showing up or how's this, but more along trying to create something that you can follow through every single day and not have to worry if the markets are up or down. Like you said, you're just going off of the seasonality and really basing off of the price action versus of what you're thinking about or emotions that are coming into play.
So here's the thing. Over the long sample, we've seen many pieces of evidence that value proposition with dividends and things outperforms growth because you have these massive growth cycles, but you also have the collapse. And if you're holding through, they tend to actually underperform what I just mentioned with value and dividends. So people don't recognize that because they always think, well, I could have caught that growth spike. Okay, they could have made money. They should have made money. They would have made money. When you take and focus on the value, you could actually outperform the growth strategies over the long sample. The same thing kind of applies here, where if you lower the variance and you just trade long short, always hedged, you may have a day where, you know, you could have made 10% on, you could have doubled your money, whatever, right? And you won't have because you're long and short. But think about all the days combined. Think about a career. Think about doing this for 10 years. And I've worked with traders that haven't had a losing month in over 15 years now, not even a losing month. So that's a career approach. And that's what you really want. You want to make trading boring. I've said that before. You don't make it repeatable. You have to have a positive expectation for everything that you do. And you could do the right thing and still have the wrong results. But at the end of the day, I think that if you lower the risk to blowing yourself up by being neutral, I think it's really helpful.
Okay.
And sustainable as well. That's what we want. Sustainable trading. Okay.
All right. If you want to join in some more with us on StockOdds, we do this every day at 10:30. Pre-market prep with StockOdds, and finished out the day off the lows of the session. We just caught a little extra pop here in the last few minutes. We're still down over 100 handles. We'll be focusing on that 39.08 low overnight. See if they take that out and get that flush bottom on the quad wedge expiration. And then going back on the upside, I mean, I don't think you could get a tad optimistic about this market until you get over last week's low, which was 45.75. Rob, great information. Thanks for setting things up for us. And we're going to get you back on this again soon. So thank you, and I'll talk to you in the morning.
Thanks for having me, guys. Appreciate it.
Mitch, great job today, as
good to have you
always.
guys.
Yep, and we'll be back tomorrow. You know where to find us, 8 a.m. pre-market prep.
All right. Don't miss a team. Cannabis Insider coming up next. And of course, one of the things that I've been noticing in the SPY action is the now increasing ATR. It seems like every time we're getting this increase of volatility, it brings some down moves. We'll see if we reverse out of this. Catch us tomorrow. Pre-market prep. Be there. Quad witch, triple witch, maybe triple Mitch. We'll find out tomorrow. Hit the thumbs up, team. I'll see you guys. Check out Cannabis Insider up next. See you. Like always, the markets aren't easy. Got to keep pushing, team. Always building on the skills.